Hi everyone, hope you're all doing well. Let's talk about DraftKings really quickly because I've had a lot of questions about DraftKings in the last 24 hours. And obviously that's to do with the share price going down. And obviously the share price at one point was down nearly 9-10%. And obviously what's my thoughts on that? Obviously the first thing he's going to say is, obviously the reason why is because everyone's a little bit worried, seeing that share price drop so much. It's like, oh, is this panic time? It's totally opposite to the other day when obviously the stock was up whatever it was on earnings, and then for some reason it gave it all back. Obviously when the stock is down, obviously that's the fear that's created out there, and obviously as we always say, fear is the biggest emotion in the stock market, and I think a few people are worried about it. So let's talk about the share price. I mean, obviously it's been a frustrating kind of 7 days as a DraftKings shareholder. The reason why is we've seen obviously them bring out earnings, and earnings were like, in my opinion, DraftKings brought out the best earnings I've seen of earnings season. They were absolutely fantastic. I've not seen a better public company so far bring out earnings that DraftKings brought out. So it's been frustrating to see, first of all, the stock kind of give all them earnings back, and then it did start to have a bit of a rally up since earnings, not by much, only by a couple of percent, and there was some upgrades starting to happen with the stock, even though it didn't really do much on the share price. But then it's been a little bit more frustrating to see in the last 24 hours, the stock was ticking on nicely, and then boom, the stock drops obviously 9-10%. Since then it has had in after hours a little bit of a rally up, so it's only down 4%. But what is kind of causing that? Well, the reason why is because this stock, Penn National, as you can see here, is up 23%, and the reason is because the news they brought out spooked a few people that are DraftKings shareholder, I think. So if we have a look at what caused it, is basically Penn National came out and they said they're going to rebrand the platform to ESPN, and they're going to get the exclusive sportsbook and also the exclusive advertising rights, I believe, to the ESPN network. Obviously, the big thing is ESPN is obviously owned by Disney, and obviously the big worry with that is that, first of all, obviously you want to have ESPN with the sports to be advertising on it, but I think the other thing that's really affecting DraftKings stock here is that this is quite a surprise, because if you remember only a few months ago, this was on the October 7th, they said that DraftKings shares spike, which by the way, I think on the day it actually gave all of the gains back on this day once again. It gave it all back on the day, because it said that there's going to be striking a multi-billion-dollar deal with ESPN, and that was to give ESPN exclusive brand partnership to the to DraftKings on the network, and obviously that's now gone to Penn National. So obviously, from this time frame here, my first thoughts are, well, clearly ESPN, their first point of call was DraftKings back last year. Obviously ESPN and DraftKings had a talk. Obviously Disney as well owned a stake in DraftKings, and obviously they've sat down and gone, oh look, we want to have exclusive rights with yourself, DraftKings, and obviously DraftKings said, oh, well, we want to have exclusive rights with you. Let's sit down and try strike a deal. Sounds like obviously these guys have tried to strike a deal, and obviously the deal that looks like was very close never actually got signed. So clearly there was kind of a sticky point where DraftKings and ESPN and Disney decided to walk away from each other, which is quite a surprise considering Disney have a stake in DraftKings. Now obviously, looking at this here, the reason why, and looking at the reports on what the deal is for Penn National, obviously I think the big thing is ESPN probably wanted their brand name on it, and obviously being called the ESPN Bet is probably something that maybe was what they were looking at. I still think they could have probably done that, some sort of unit or a second sports book through DraftKings itself, if that's what they were looking for. Obviously they have good tech, but I think the other sticky point is probably it was a 10-year agreement, and they are going to be paying Penn National are going to be paying ESPN $1.5 billion. Now, I was quite surprised by that amount. 1.5 billion is a lot, and to put that into context for the likes of Penn National, for DraftKings to generate 1.5 billion in profitability, obviously, we always talk about potentially a longer term 10% profit margin on it. You would have to be talking, 15 billion in revenue to generate 1.5 billion if you get to that 10% profit margin. And the other thing as well is DraftKings at the moment is doing 3 billion, and maybe in the next 10 years they do get to 1.5 billion, but that's a steep price to pay up. And in the context of Penn National as well, when you look at Penn National, at the moment their sportsbook's terrible. Let's not forget, Penn National Sportsbook at the moment is terrible. They've done a terrible job, which we'll get onto in a second. But the revenue is hardly growing compared to DraftKings because their sportsbook is dead. But the thing is, for Penn National, they're generating a bit of money, but not a terrible amount. But the thing is as well is like for financial health wise, they've got a lot down the balance sheet, and they're not very cash heavy. They've got 2.8 billion in debt. That's basically all the cash on the balance sheet that Penn National have. So for them, it's going to take a big whack out their profit and off their financial health. But the reason why Penn National had to sign it is because they were losing out. Penn National was being this big sports betting brand for so many years in the US. They were looking at this big growing TAM and looking at Flutter and DraftKings going, we're way out of this, we're losing to them massively. So for Penn National, they've got to the point of view where we're not involved in here, we're struggling, we need to have a rebrand here. And obviously for them to sign a deal that in my opinion is a bit expensive, for them they had to really do it because they're losing massively. They've got nothing to lose. Their sportsbook has failed. So they need to sign the deal to try and get back into this game. So that's why for Penn National, they're okay to sign a horrible deal because they need it. And the difference is between DraftKings don't really need it because they've been doing absolutely amazing without it. They're not struggling. Their sportsbook's amazing. The one between DraftKings and Flutter, the two top dogs in the space, that control 80-90% of the market share. The revenue's growing. They're on the path to profitability. They didn't really need to sign this expensive deal, and it's probably the right thing that they've walked away from it. But when you look at Penn National, they really needed it because they're struggling. So for them, even though it's a bad deal, they've not really got anything to lose if they're number one player in here, and this is one of the biggest TAMs in the sector growing. And they've for so long they've done sports betting. They need to be back in this area, so they needed to do it. DraftKings didn't need to do it, and DraftKings didn't want to pay over the odds, and Penn National did because they needed it, and that's ultimately what it kind of went down here too. But I've got to say that with Disney, so I can understand why DraftKings avoided the deal because obviously they had the first dibs and they went, it's too expensive. I can understand why Penn National took the deal because they needed the deal. What I am surprised with is Disney and ESPN. I'm very surprised they've gone to Penn National over DraftKings. Even if they can get more, if they can suck more money out of Penn National, I'm surprised they've done it because this is me putting on now my ESPN and DraftKings shareholder hat. As a shareholder of Disney, I am surprised and disappointed they've gone with Penn National. They might make good money off them, but in the longer term, what is the better brand deal? It's probably DraftKings. You've got two major players there. You probably go, right, we want to have the market leader or what will be one of the two market leaders with 90% share. It's DraftKings. You already got a partnership with them. You've already been working with them. You've seen the benefits they have. Why would you not go with them? They are a developed leader. You could have, I think Disney should have gone to DraftKings and gone, we'll give you exclusive rights, but you give us an extra 5% holding in your company and do that through a share issue. Because DraftKings, the shares done amazing. They could do a share issue right now if they wanted to and do that. And I think shareholders would be happy with that. That would have been the right way for Disney to go about it. Have the number one player and have a bigger stake in the company to get the rewards from it. But it didn't do that, which is absolutely crazy. And I still think today, if I was Disney and if I was Bob Iger, and I said Bob Shapak there. If I were Bob Iger, I'd be like, I need to own. I would have even done that and be buying a bigger stake in DraftKings because they are the leaders. That's who you wanted. It's okay getting a cash grab for it, but at the moment, but you look at Penn National, the things they've got to do with the ESPN platform now is they need to advertise it. Advertising obviously isn't cheap. Obviously they might advertise through ESPN. I don't know if they're going to give that for free or if they're going to have to pay for the advertising, but there's also the other improvements that they need to make. The building up of the platform, the reason why Penn National are needing to go Disney is because their platform's terrible. So Penn National still need to build a successful platform on the likes of what DraftKings have. So that's another issue. So you're having to go with a platform that still has to put a ton into advertising, which DraftKings has done, and they've now got to a national scale, and they can pull back. Penn National still has to go through that. They have to spend a ton on improving the platform, because it's okay putting ESPN on it, but it's like putting lipstick on a pig. You've still got not a good app. You've still not got an app that's on the level of FanDuel and DraftKings, which is an issue. So from a Disney's point of view, as a Disney shareholder, I think I'm disappointed with this move. You would want to go with the one that you have the good ties with and probably one of the number one player, but clearly they've gone for the cash grab. So, I can understand why DraftKings said we can't. That deal is way too expensive. I can understand why Penn took it because they were done. They were out of the game. They were out of the online sports betting game, so they had to take this expensive deal. But from Disney's point of view, they could have got either an easy cash grab from Penn National and we're going to make good money in the next kind of 10 years from Penn National, but as a longer term TAM of the next 10, 20, 30 years, it surely would have made sense to go with one of the dominant players that already owns, half of, 80-90% of the market share, that's going to be the number one player. And that's probably the most surprising thing. And me as a Disney shareholder, I'm looking at it going, they've made some weird decisions in the last kind of couple of months. And this once again adds to the list of for me, I'm looking at it going, that's not the right decision. And that's the most surprising thing. Now, just going to DraftKings, obviously, why is DraftKings kind of down from this news? Well, obviously, probably the competition factor, someone else coming into the space. But like I said, for Penn, Penn have already tried this once. Like I said, you can put lipstick on a pig, but they've still got to, they've already failed once. Just putting another name on the platform isn't going to make that big of a deal. They've still got to make mass amounts of improvement to, get anywhere near DraftKings. So I'm not too worried about that. And there's going to be other players coming into this space because it is, such a hot TAM. I think the other thing is actually losing the advertising side of it, being advertised on ESPN, which is not good. I would have liked this deal for sure, and the advertising aspect is fantastic, and obviously to lose that isn't great, and I understand that. But you look at the likes of, let's say, Flutter, FanDuel, this sports betting area is controlled by two people basically, DraftKings and FanDuel. They've got 80-90% of the market share. It's kind of a duopoly they've got going on at the moment. You look at FanDuel, they don't advertise with ESPN. So if FanDuel have been able to come a duopoly with DraftKings without the ESPN advertising, it shows you that you can be a serious player in this area without ESPN. FanDuel are the example. They don't use ESPN for advertising. So it's not really that big of an issue. Obviously, I would have liked it. I would have liked the Disney partnership. For advertising point of view, obviously probably one less competitor in here, but ultimately I still think they'll do okay. You look at Flutter, FanDuel, they've done okay. You look at Penn National, if you look at their previous success, they've failed. So they've got to start again from day one, and they've got to do better than what they did last time. And realistically, do you think a name change is going to make them do any better? I'm not personally too worried about it. Obviously, the element this time is that they do have the advertising perks, but at the end of the day, if you've got a platform that isn't working, people aren't going to use that platform. So I don't think that's too much of a major issue. And I think DraftKings should do okay from the situation. It's just that I personally thought this was a kind of a nailed on thing. And I'm really surprised that Disney have decided to go for a short-term profit on payment rather than benefiting, in the next kind of 10, 20, 30 years, maybe these payments start running out and maybe, Penn National and Disney have, fallouts on the way. I would have thought that the market leader would have been the way to go with someone that you already have a strong partnership with, but from what it looks like is that ESPN probably looked to try and fleece DraftKings too much and thought, let's go to this platform that need us, and they'll overpay for it. So yeah, that's it overall, guys. So I think they'll be okay. Obviously disappointing, and probably is a little bit of negative news for DraftKings, but I think they'll be okay in the long term anyway. So hope you enjoyed the video, guys, and I'll see you all in a bit.